Good morning, ladies and gentlemen. My name is Greg Michalowski from Forexlive.com. Today's date is November 23rd, 2022. This is the Morning Forex Technical Report where I go through the technicals that are driving the Forex market. Now, it is the day before Thanksgiving. We just had a data dump with the initial jobless claims and durable goods coming out better than expectations. But we are seeing some limited price action, at least in the Forex market. So let's take a look at some of those markets. We'll start with the euro versus US dollar. Looking at the euro versus US dollar, you can see what I mean about the price action and trading here today. It's up, down, up, down, up, down. The converged, or the once converged 100 and 200 hour moving average is now reversing directions here, with the 200 higher, the 100 lower, is seeing the price action move above and below those levels. We have these swing areas through here that seem to be bookending the pairs up, lower and higher extremes, and that is where, if the 1 and 200 hour moving averages are the barometers for either bullish, stay above, or bearish, stay below, or neutral in between. Getting outside of these swing areas up here and down here would probably give the euro versus US dollar some directional bias in trading here today. Right now, we are seeing the price just near the top end of the moving average extremes, with the 200 hour moving average at 1.03285, the 100 hour moving average at 1.03059. Get back above this level. We were just above it, so it is a bit disappointing that the price could not extend further. But perhaps that's what we're in for in trading here today, with the day before the Thanksgiving holiday in the U.S., putting a damper on price movements and directional biases here. So be on the lookout for these yellow areas. You can see the different support and resistance levels through here as why they are important, and look for the breaks if you so choose. Let's take a look at the dollar versus yen next, and what we see on this currency pair. In trading yesterday, we came lower here off of the 50% retracement, the 50% of the move down from this high right here, which is back on November 9th to the low price that we saw on November 15th. 50% stall, the rallies through here, and that pushed the price down toward this blue line right here. This blue line represents the overlay of the 100-day moving average. On the hourly chart here, you can see the number of different times that the market skimmed along the bottom here, trying to find support buyers. Finally, in the Asian session, we did see a rotation to the downside here that took the price below that level. But we had this swing high right here, and also the rising 100-hour moving average to contend with, and market sellers thought better of it, pushed the price back above the level, and you can see we've tried to move below again here, and in the current hourly bar, we're trying again with the 100-hour moving average not far behind at 149.24, trying to hold support. The low price just reached a level of 140.98, about 6 pips away from that level. If we get below the 100-hour moving average, however, that should open the door for further selling pressure. Otherwise, right now it seems like traders are leaning against that level, but we need to get back above the 100-day moving average and the 38.2% retracement. By the way, both of those levels come in at this 141.14 level. So, like the euro versus US dollar, we're finding some difficulty in up and down directional plays and trading here today. We'll see if the market is able to break outside of these ranges by looking at the 100-day moving average or the 100-hour moving average. Let's look at the sterling versus US dollar. And this is actually making a little bit of a break here. So we are seeing action in the sterling versus US dollar. What we're getting above and what we're seeing here is a move above this swing area. This swing area comes between the 119.41 and 119.54 level. A number of different high prices where the market stalled in that area, including today, where the market came up to that level and backed off a little bit and then moved back above. And so we are making a break to the upside here above the 119.54 level, currently trading at 119.68. If the price is able to stay above that level, that's more bullish. We got the help or the bullish bias after the price moved above the 100-hour moving average trading yesterday. We did try to break below that level at one point during the New York session yesterday, only to fail rather quickly and close above that 100-hour moving average. In the Asian session here today, we stayed fairly comfortably above that 100-hour moving average, giving the go-ahead to push the price higher, and that's indeed what the traders have done. And now we're making a new play above the 119.54 level. Traders looking for further upside can use this swing area as a risk-defining level. As long as the price remains above that level, it's more bullish for that currency pair. The dollar versus Canada has seen movements to the downside over the last few days, helped by the rising oil prices. Actually, this move to the upside was helped by falling oil prices that took the price of oil down to the end of 2021 closing level near the $75.30. I think the low came in at, or 35 cents. I think the low was, or the close was at the end of the year. The low on trading on Tuesday or on Monday came in at $75.27, just below that 2021 end of year close. So we retraced all the move to the upside and bottomed out, and that's where the dollar Canada had its heyday this week, rising up to the bottom side of this swing area, going back, at the 134.94 level. The rotation back to the downside took the price below the 100-hour moving average. Oil prices were going higher, got back above the $80 level, traded into the $81 range, and then started to move back higher in trading today after some ups and downs in the Asian and early European session. Oil prices are lower in trading here today. There it is. The price of crude oil is trading at $78.18. That's down a couple of $3 to the downside. So that is helping to weaken the Canadian dollar, push the dollar Canada to the upside. And in the process, we've gotten back above the 134.078 level. What is the significance of that level? Well, if you go back to these days through here and sort of blur your eyes a little bit, you can sort of see how the price was bullish above and bearish below, and came up toward that level and stayed below, and then moved above it and then moved below it. Had a few little tickles above the level here yesterday before rotating to the downside. And you can see over the last 3 or 4 hours, the price has been able to stay above that level, but after spiking to the upside, we are moving back down toward that level. We'll see if this 134.078 level can hold support. If it does, then maybe we continue the rotation back to the upside, or that would keep the bullish bias here intraday, at least for the dollar versus Canada. Down below the 100-hour moving average at 38.2% retracement of the move up. It seems like a good support level on a break. Those two technical levels come in play near the 133.92 level for the dollar versus Canada. In the New Zealand versus U.S. dollar, today we had the Reserve Bank of New Zealand, I should say, raise the rates by 75 basis points. That was as expected. And the initial move was to the downside, and then we snapped back higher, and then snapped back to the upside, took the price near the highs through here, where we have the recent swing highs for the New Zealand versus U.S. dollar. Swing high, swing high, swing high, swing high, swing high, swing high. So we're finding a number of different swing highs here between the 0.6184 level and 0.62056 level. That was the high price that we saw last week's trading after these different highs. So we need to get above all those levels in order to push the price further to the upside here in the New Zealand versus U.S. dollar. Looking at the daily chart here, this is what it looks like on the daily chart. And this level also, of course, all these highs here correspond with other levels going back all the way to the month of, looks like the month of May here in June, the lows right here, and then we broke below that level and used that level as resistance. You get the point why this area is so important and why the price in the month of November has been finding some difficulty in getting above this area. So if the price is going to go higher, we need to get above the 0.6212 level, and then we'll look toward the 0.6256 and the 200-day moving average at 0.6302 on the top side. Again, the Reserve Bank of New Zealand raised the rates by 75 basis points, which is as expected. So that's what we get. So there you have it. A look at some of the major currency pairs. We have a Thanksgiving Day holiday tomorrow. We will be sort of on skeleton staff during the New York session, as Adam still is traveling back from the Finance Magnates event in London, which was a huge success. And on Friday, we'll have another half day as the U.S. stock market and the bond market are closed just after midday, so it will go into that time. So there you have it. I'll look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading today. Bye-bye.